What's good? What's good? Welcome back to Invest and Trade with Jax. We're going to go over Bitcoin. I'm going to try and simplify Elliott wave theory as much as I can for you guys, as some of you have been getting confused here in the comments, which is completely understandable. So currently we're sitting at 30,126. We're down about 1.7 on the day. We're sitting at market cap of 572 billion, 24-hour volume 25.2 billion. Ladies and gentlemen, if you're new to crypto.com, you can sign up to the world's fastest growing crypto app. Grab one of the incredible Visa cards, cashback in crypto, free Spotify, Netflix, Prime, travel incentives, $25 just for signing up through my referral. So we're here on the daily time frame. So price action works in waves. You have impulsive waves and you have corrective waves. And really the best thing that you can do is trade the impulsive waves and either accumulate or just wait out the corrective waves, as the corrective waves can be very choppy and much harder to trade. Now, to measure your wave 3, what you can do is take your Fibonacci from the top of wave 1 all the way down to the bottom of wave 1. And the minimum target for the wave 3 is the 1.618, but usually in crypto, the wave 3 is the extended, the longest wave, and usually lands in between the 2 and the 2.618. And you can see we came perfectly up to the 2 extension. So I do believe we're going through that corrective wave 4. And to measure your wave 5, you can take your Fibonacci from the top of wave 3 to the bottom of wave 4. So if this were to be our bottom, I still think we're coming down to 22K. Then your minimum target would be the 1.618. It can get overextended to the 2 to the 2.618. But the minimum target would be 111K if this were to be our bottom. If 22K were to be our bottom, then your minimum target would be 125K for your wave 5. So I do believe we're going through that corrective wave 4. We're putting in that massive ABC correction. I'm currently going through our 5-wave structure to complete that C wave to the downside that could possibly bring us down to 22K. So if we zoom in here on the 4-hour time frame, I do believe we're looking to complete that wave 5, and we have our 5 smaller subwaves. Now all you really need to determine, to keep it simple, is your impulsive and your corrective waves. So you have impulsive wave 1, you have a corrective wave 2 right in here, impulsive wave 3, and this is just a major corrective wave 4. Now of course you can find your ABCs, you can find your WXYs, you can find your ABCDE corrections, but if you really just want to keep it simple, all you need to know is that you're going through a corrective wave and you're looking for that final 5th wave down. So if you come down, you start to lose 28.6. You notice price is starting to move impulsively to the downside, and you can start to count out your 5 subwaves and your larger wave 5. Those are much better trading opportunities. Just how we completed wave 2, we lost the support of about 37.4K. This is a much better and much easier trade than trading the correction. A lot of analysts and people who teach Elliott wave will tell you don't trade the corrections because you can easily get wrecked, or wait for the correction to be over and trade the impulsive wave. Even if we zoom out here on the daily, and we'll go back to our first couple impulsive waves on this bull run. So it's much better to trade this impulsive wave than try to trade this correction, as it's very choppy, it's very up and down. Much better to trade this impulsive wave 2 than try to trade the correction. Obviously this is a massive correction, and of course you would want to take some trades on these impulsive moves up, but it's always better to look for the impulsive moves. As you can see, when we're correcting, it's much better to trade this impulsive move than to trade this correction. Much better to trade this impulsive move than currently try to trade the wave 4 correction. I still do trade, but I trade with way less capital, and mostly I've just been accumulating. I've been dollar cost averaging. That's another thing that you can do, is just accumulate. In an uptrend, when you're going through a corrective wave, just accumulate, just dollar cost average, and wait for your next impulsive wave. Start to take profits on the way up, and when we start to drop again, accumulate. Start to take profits, we start to drop, accumulate. It starts to break out, impulsive wave, start to take profits, we go through a corrective wave, accumulate. That's what a lot of the big boys are doing. The institutions, they're accumulating BTC right now during this correction, and they just waited out for that next impulsive wave. Because as you can see here, if we zoom back in on this wave 4 correction, it's extremely choppy, and we're just currently range bound, and it doesn't mean that you can't trade. It's just much riskier. And honestly, if you are going to trade, I would just use way less capital, in my opinion, not financial advice, as it's much more risky to try to trade this choppy sideways action than to just wait for the next impulsive wave. So as I've been mentioning, we may be going through a WXY. Now I was talking about a possible ABC like this, ABC, that could take you up to 33 to 34K. Still a possibility here. And within WXYs, our smaller ABC correction corrections. So I'm just going to grab my brush. So we've come up A, B, C. We've come down A, B, C. Now for our wave Y, this may have been our wave A, and we've come down, corrected wave B, your final wave C, and we've completed the wave Y. And we could be looking at impulsive wave 1, corrective wave 2, impulsive wave 3, corrective wave 4, impulsive wave 5. The thing with these corrections is they can be easily invalidated. If we come up and we break this high, then it invalidates that, and we're looking at a larger wave C. So if you just want to simplify it, all you need to know is this is a corrective wave 4. Draw out your support and resistance. As you can see here, we've seen multiple resistance off this trend line. So we have a descending triangle. So if we hit resistance, we come down, we break down, and we back test it, and we begin to come down. That's stronger confirmation that you're coming down for your wave 5. And then if you break out to the upside, well, you can measure your descending triangle, and that's when you may be looking at a larger corrective wave 4, and that could take you all the way up here to about 37K. Now, if we were to come all the way up to about 37K, that would be more confluence, in my opinion, that this correction is over and we're looking for a continuation of the bull market. But if we simply come up to 33 to 34K, then it's just a larger corrective wave 4 looking for that final wave 5. And if we do start to break down, your measurement to the downside would take you right down to that 24K price target, which we've been covering on the channel in between about 22 to 24K. So if you don't want to stress out trying to trade or figure out the corrective patterns, the ABCs, the WXYs, the ABCDEs, you can just wait for support to be lost, back test it as resistance, then you have stronger confirmation you're coming down for the wave 5, which is a much better trading opportunity than trying to trade this sideways consolidation instead of waiting for the breakout either to the upside or to the downside to enter a long or short position. Otherwise, if you do want to take trades during this kind of consolidation, what you do is you just trade the range. So I've dropped in a big orange box here. You find support, resistance. You can use your indicators, look for bullish, bearish divergence, overbought or oversold levels, and try to just trade the range. Buy support, sell resistance, buy support, sell resistance. You just have to be careful and understand that you can get stopped out quite easily, as if you come up and then you buy resistance and then it wicks up, it hits your stop loss, and then it drops down. Much more difficult to trade than trading the impulsive move, where you have a clear trend and it's much easier to trade and make larger profits than simply trading the range. But of course, it's up to you. Not financial advice. I'm not your financial advisor, just a young guy from Canada. I do believe we are going through that corrective wave 4, looking for that final wave 5 down to 22 to 24K. If I'm wrong and this is the bottom, then what you could do to give you your wave 5 targets here is take your Fibonacci from the top of wave 3 down to the bottom of wave 4. So if this were to be our bottom, then your minimum target would be the 1.618. Let me pull this out, which is coming in at about 124K. And then you have the 2 extension coming in at about 181,000. Still do think we have one more wave down to bring us down to the 200-week moving average, coming in at 22K. And the confirmation that I'm looking for is we simply break 28.6, we back test it as resistance, and then we'll start to come down to that 22 to 24K price target. If we do break out of this descending triangle, it is a bearish pattern to the upside. Just watch this resistance at 33 to 34K. If we do get rejected, I do think it would just be a larger wave 4. And we're still going to see that wave 5 to the downside. A little bit of boring price action here. Definitely a great time to be dollar cost averaging, accumulating. That's what I've been doing for a lot of my altcoin positions. And I will continue to do that if we come down to 22 to 24K. And if we start to break above 33 to 34K, I'll continue to dollar cost average on the way up for my long-term holds and my dollar cost average trade. So that's it for this one. Big shout out to the Discord. We have over 1,900 members posting chart patterns, talking all things crypto, and you can sign up through the Patreon. We also have the dollar cost average trade strategy fully explained. Very simple, low stress way of trading the DCA charts and buy and take profit zones if you want to start dollar cost averaging into your altcoin positions. And at the $10 membership, my exact entries, exits, and take profits, you can sign up to the Patreon. Sign up to Bybit. That's where I do my trading, and I'll see you in the next video. All right, much love. Take care.